Hi, good morning, good afternoon, everybody. We welcome you to the webinar organized by GemAtlas. Today's webinar will be conducted by Mr. Firoze Andhyarujina. We are very thankful to Mr. Andhyarujina conducting this webinar for us. In case if you have any questions during the webinar, you can post it in the questions panel available on the right panel. Now I hand over the presentation to him to take it forward from here. Thank you.
Good afternoon, friends. Concerning the Union Budget of 2017-18. I think this budget has to be examined from the perspective of demonetization which has taken place. But before that, I am tempted to quote a new theory which is propounded recently, namely the theory of black swan. Nadim Nicholas Taleb, a Lebanese American analyst, a research and risk management and an essayist, discovered this theory of black swan. The black swan effect implies unprecedented events created by human beings, which has far-reaching impact on the future of human civilization. Instances of black swan recently started from 2008, when the Lehman crisis started. However, the economic effects still continue in Europe till today. Or you have the very recent instance of Britain going out of the Brexit. The EU, which was an umbrella of the countries in Europe to come together for economic and political revival, has suffered because of the United Kingdom's going out of the Brexit. Or take another instance, a very complicated point, South China Sea, where the territory of Philippines and the islands were in question. The matter goes up to the International Court of Justice with an award in favor of Philippines. And yet, an ally of the United States, Roberto Duterte, goes and sides with China as against an ally for more than 50 years, being the United States. Or take the recent instance of Donald Trump gaining presidency of the United States and having some radical changes and radical policies. To this list of black swan effect, which are unprecedented events in recent times, we have to consider one additional point so far as the Indian perspective is concerned, namely the demonetization which took place on 8th November, almost simultaneously and concurrently with the advent of Donald Trump in the United States. The black swan effect, therefore, has to be analyzed and to see the impact of demonetization, how it will fan in the near future, as well as how it will affect the financial and the monetary positions of the country as time goes by. This union budget of 2017 and 18, presented by the finance minister, has therefore to be examined first in the light of demonetization. Demonetization has now come. I am not here to give or comment on the merits or demerits of demonetization. I'm just coming to the essential issues which are very important from the perspective of an individual, the common citizen, from the company's point of view, what precautions and what issues would arise. I think these are very important. The first issue after the post-demonetization is the dormant bank accounts. There were many bank accounts which were dormant. All of a sudden, these bank accounts have become active. Question is, these dormant bank accounts becoming all of a sudden active have to be looked into. Then there are these shell companies, various shell paper companies floated for siphoning of the money. The shell companies have to be looked into. What we call the substance of the transaction has to be examined rather than the form. Coupled with that, I think so an important issue will arise regarding the source of the money. The source is important because if a source is explained but still it is little doubtful, then you can go to the source of source to find out the exact nature of the transaction. The other point is interbanking transactions, the transfers of funds from one banking account to another banking account. Why has transfer of funds taken place? Interbanking transactions will have to be examined. And finally, multiple accounts. Person having multiple 4-5 accounts. What is the need of having so many accounts? These are the issues which one has to be prepared to face the after effects of demonetization. Compared with that is another issue connected, and that is cash deposited. I start first with the advertisement which came after 2 days post demonetization. The advertisement said, honest business, small businessmen, housewives, artisans, workers, etc. can deposit money up to 2,50,000 rupees in their bank accounts. This is an assurance by the government that honest businessmen, small businessmen, housewives, artisans, workers, honest citizens who may be having cash up to 2,50,000 can deposit it. However, we have now come across a situation where people who have deposited over 2 lakhs of rupees also have been brought and served with some questionnaires and notices. I think this kind of an attitude can create little ripples and may also derail the faith in the government. It has to be looked into, therefore, in a proper perspective as to catch the real big fish and not go after the common honest citizens. The issue, therefore, on cash deposits would be to take precautions of the following points. Number one, all of a sudden, you have a spurt in sales. The sales just increase around that time of demonetization. The government has come out with a circular that those sales which are electronically and digitally done would be exempt. Only the cash sales which have spurted pre and post demonetization would be looked into. So one has to be careful to see that mere spurt of sales or mere spurt in the profits should not be brought into. Second, jewelry. All of a sudden, during those times, jewelry purchases increase, or the sales of jewelry by the dealers have increased. One important precaution is the bills which are given at the time of sale must necessarily now reflect the TCS, tax collected at source, plus the service tax and the deposit of these during the statutory period of time. Otherwise, the transaction would be under a cloud and in a doubt. Therefore, it is absolutely essential that in these circumstances, sales of jewelry should be accompanied with proper identification, PAN number, plus what I'm trying to emphasize is the tax collected at source, the service tax, and other details. Otherwise, the whole issue would be in a doubt. Or take in a cash deposits, another avenue, agricultural income. When you talk about agricultural income, now, as per the recent CBDT circular, with about 16 frequently answered questions circular, on agricultural income which you show, what is absolutely required to be shown is not necessary that you are a registered agriculturist, but what is very important that you should project and show is the acreage under cultivation, what is the crop yield, what are the seeds which you have sown, what are the sources of purchases of the seeds, and a certificate is required from the Gram Panchayat certifying the sale of the various crops and the types of crops, the nature of crops. These will require consideration so far as the agriculturist is concerned. So documentation is very much important rather than saying or making a claim that I am a mere agriculturist. These points have to be considered. Also, please note a very important point is about the Hawala transactions. There are a number of Hawala transactions. Normally, from experience, the Hawala transactions are normally not correct transactions by and large. So, especially with the currency coming in, you have to be careful about the entries, the book entries which are given to show that these are not just mere entries given, but it is backed up, and in that regard, certain positive documentation would be required. Let me just point out a few figures. The government's anxiety to remove black money from the economy and from the circulation started with the government's scheme for the people to declare their foreign income and assets. Therefore, the first scheme of disclosure of foreign income and assets abroad came in 2015. When the scheme got over, there were 644 applicants, and the government fetched 2,428 crores. This was not sufficient at all. The government then shifted its direction for the Indian public to remove the black money in India, and they started with the income declaration scheme, which got over in September 2016. Under that scheme, the government was able to garner 65,250 crores, netting approximately an amount of about 30,000 crores. But this was not sufficient. Therefore, in December 2016, the second income declaration scheme came into effect. In the second income declaration scheme, popularly called the Prime Minister Garib Kalyan Yojana, under that scheme, the composition of the scheme is that unaccounted money can be accounted. You have, in the first case, to deposit 50%, which includes tax penalty. 25% you are required to purchase the bonds, which are the Prime Minister Garib Kalyan scheme bonds. And these bonds are for a period of 4 years. The bonds do not carry any interest. They are redeemable after 4 years. 25% of the amount is required to be deposited in these bonds, and 25% of the balance amount you can retain. This scheme is still open right up to March 2017. This scheme excludes the following items. It excludes jewelry declaration, it excludes immovable property, it excludes stock in trade, and foreign assets and income. But it includes one important thing, and that important thing is that in the original income declaration scheme, people who were searched or who were under survey could not make a declaration. Under the present scheme, Income Declaration Scheme 2, which expires in March 2017, even people who have been subjected to search and seizure operations and survey can make a declaration scheme, giving them some opportunity. Connected with that is the issue of search and seizure. The government has stepped up the action wherever it finds that there is unaccounted money. A search and seizure operation is carried out. Please note, in a search and seizure operation, you have to be extremely cautious to see that your books of accounts are properly maintained. Books of accounts also include the computer disk, because nowadays a computer disk is also regarded as a books of accounts. So those floppies must be properly done, and the cash or unaccounted money, if found, would be taken into consideration. It would be collected by the government, treated as advance tax, and it would be adjusted after taking that amount as unaccounted income. There is also the issue of a revised return. People have a tendency to revise the return as per section 139 subsection 5. But in revising return, please see that unnecessarily the cash balance as on 31st March, which we have shown, is not revised unnecessarily unless it is backed up. Similarly, higher profits, higher sales, just to camouflage, cannot be taken into consideration. These are the points of precaution which people have to take on the demonetization, because it has now become a reality and the government is going in a big way into it. I think with the demonetization, Another very important step which the country is going forward is with the goods and service tax, the GST bill which would be coming, and the act, one act throughout India, converging various taxes into one. It's a very good and a needed legislation for India. But I want to point out at this stage three important points. The first precaution which people and the draftsmen should take, and the GST panel should consider, is the definition section. You have to properly define the term agriculture. You have to define the term agriculturist. Now, the controversy of definition of the word state, because recently states have claimed that 12 nautical miles from their coast is part of the state territory. It has to be made very clear that 12 nautical miles from the coast belongs to the state or belongs to the union. The definition of state, therefore, is extremely important. Second issue which requires consideration is that in the GST, they have introduced a very difficult provision giving powers to the GST officer of arrest. It is provided that where the amount involved is between 2 crores to 5 crores, which is sought to be evaded, the arrest can be made, but it will be a bailable offense. Beyond 5 crores would be a non-bailable offense. The problem is to bring such a harsh provision and the powers to be vested with an officer would be arbitrarily exercised at times, and therefore due caution must be made on this question of arrest or the authority to implement. The third issue, which again requires consideration, is the definition and of the nature of goods, the rates. You see, at present you have got about 4 different types of rates. 4 or 5 rates are being talked about, different slabs. This would depend on the nature of the goods. But the nature of the goods have to be properly done. It should not be that it is ambiguous so that one goods falls within different classifications. Earlier we had in the excise duty the problem of classification in one entry or the other, which created a lot of litigation. I think so much care must be taken looking into the nature of the goods to put it into the right classification and the right rates of taxes. And for the starting, I think it would be prudent for the government not to exceed about 18%, and then it can gradually increase. But for the time being, 18% in my opinion seems reasonable. I think it would be fair, it would be correct. I think that if GST even is, if it is delayed a little bit, there is no problem. It is inevitable. It has to be brought. But I don't want a truncated or a difficult piece of legislation which requires a lot of interpretation. The definitions, the positions of arrest, the provisions concerning the rates, nature of goods have to be sorted out before you get a good GST, which is absolutely required for the country. The government, in order to catch the big fish, more particularly on immobile properties, had brought the Binami Transaction Act. Now, this Binami Transaction Act was originally first brought in 1988. It did not have much teeth. 2016, the Binami Transaction Act is properly framed. I think it will create a real scare because there would be attachment of property. People who have merely lent their money, the name of some other person, if these are properly analyzed, specifically on immovable property, this legislation will go a long way. It will also reduce the impact on property prices, and this Benami Transaction Act has to be used sparingly and in a proper perspective. In the budget, the finance minister, for the first time, has lowered or reduced the rate of taxation at the lowest slab. For people who are earning from 2,50,000 to 5 lakhs of rupees, the slab of tax has been reduced from 10% to 5%. Very good. However, the rebate has been reduced in those cases from 5,000 to 2,500 up to rupees 3,50,000. In other words, the impact of this is that people do not have to pay taxes up to 3 lakhs of rupees, even though the threshold starts with 2,50,000. So the rate of tax of 5%, the slab shows 2,50,000 to 5 lakhs. In reality, it means 3 lakhs to 5 lakhs, because up to 3 lakhs there is no tax at all. This position is even today prevalent. Today also up to 3 lakhs there is no tax at all. And if a person takes various advantages of various deductions, it may work up to 4,50,000 rupees. Connected with that, because of the lower reduction of 5% tax, there will be an on-board reduction of tax in all rates, the maximum being up to 12,875 rupees in the highest level. The finance minister has also done well by saying that for the first time taxpayers, there will be just a one-page tax return. You fill in, you file it. He's also assured that there will be no scrutiny assessments for the first time people filing a one-page tax return. It's very good. Unless there is suspicion, then obviously it requires scrutiny, but otherwise there will be no scrutiny. But I want to caution one point. Why have this one-page return only for people up to 5 lakhs of rupees? This one-page return should be applicable to all assessees, especially all individual assessees. It is like in Hong Kong. You have a one-page return, you fill it up, you put your check of the tax, deposit it in a box. That's all. I think it is time that we trust the Indian taxpayers. This one-page form is very good, but it should be extended, I think so, to various categories also. My other grievance to the finance minister is that if you look at the rates of slab, the lower slab 2,50,000 to 5 lakhs, 5%. And then look at it, 5 lakhs onwards, the next slab is 20%. There is no slab of 10% at all. It would be extremely prudent and good if the finance minister reconsiders and at least from 5 lakhs to 25 lakhs or 20 lakhs puts a 10% tax. Because if you see the entire slab and the rates, it is 5%, then goes straight to 20%. Please see that at least 5 lakhs to 20 lakhs or 25 lakhs, you have 10% and then the remaining. However, I want to point out that though the anxiety of the government is to extend the tax net, it was also imperative, according to me, to increase the threshold limit. It's about 2.5 lakhs, 3 lakhs. It should have been at least 3.5 to 4 lakhs and 5 lakhs. Just want to bring one idea. Recent statistics showed that major chunk of the revenue collection is by 26% of the taxpayers, which means about 74% are hardly contributing any amounts. If this is the case, better simplistic approach to start the tax rate and tax only those above that, because for 74%, the government is wasting its time, resources, trying to fetch people who contribute very less. Expansion of the tax net doesn't mean that you get a lot of returns. Returns which hardly fetch you any income. That will not serve the purpose. I think government should seriously consider of increasing the threshold, concentrating on 26, say, start your slab with 50 lakhs, I'm making this appeal, and then I think so, the more revenue will come. But on the tax slabs, people who are earning 50 lakhs to 1 crore of rupees are now subjected to 10% surcharge. In this connection, people earning over 1 crore of rupees at present pay a surcharge of 15%. There was no surcharge at all for people who were earning from 50 lakhs to 1 crore of rupees. Now the government has proposed to bring in a surcharge of 10% for people between 50 lakhs to 1 crore of rupees. I think this is little difficult and tough because there will be a lot of outflow. People on the margin of 50 lakhs may try to see that they fall below 50 lakhs to avoid this. The surcharge actually is required when there is a war. Started with Bangladesh war, we had a surcharge. Now things are quite normal. We don't require a surcharge. I think so the better thing would have been to abolish all surcharge and cess and fees. That would have been the best possible issue. To reduce the rate. Take for example, even for companies. Last about 3 years, the corporate India has been waiting to see that the tax rate falls because the government had promised 25%. You see, Make in India policy has come, but this should be substantiated with encouragement and lower tax rate. A lower tax rate and the compliance with tax laws is one of the major factors of ease of doing business in any country. Look at the Asian countries and the ASEAN countries. The average rate of tax there is about 22%. Compared to the big corporates, it is only the big corporates who do the exports and compete there. They are suffering with a 30% rate. So the rates of tax for companies should be reduced in line with the ASEAN countries. About 22% or 23% should have been brought by the finance minister to encourage it. Though the finance minister says, and he has been very correct, for SMEs, small industries, where the turnover does not exceed rupees 50 crores, the rate of tax is 25%. The recent clarification by the government says that even if your rates are less than 50 crores of rupees, but in the next financial year, even if it exceeds 50 crores to a little extent, as may be notified, those companies would pay 25%. Good provision. But this would be for SME, small companies, make in India, in India. But we want to extend the theory of make in India abroad. For that, the big corporates should get an advantage, and that advantage would be by pruning down the rates of tax to about 22 or 23%. That would make the Indian companies extremely competitive compared to the other countries. Let me now come and explain to you a few important provisions in the finance bill. Friends, I want to tell you that this time the finance bill has about 150 clauses. Out of the 150 clauses in the structure of the finance bill, if you see details, there are very few clauses on excise, very few clauses on customs, very few on service tax, some on SEBI, some on negotiable instruments, other acts. So for the income tax, there are 88 clauses. I want to make it clear at the outset that there is too much of tinkering and too many provisions and amendments brought in the finance bill of 2017, totaling to about 88 clauses to be precise. I will deal with some clauses which I think would be relevant for you. The first one, it's not in that order. Whichever I think is important, I will just explain to you. The government has come out with a very good provision on presumptive taxation. It says that small businessmen having turnover of up to 2 crores of rupees need not maintain books of accounts, need not be subjected to tax audit and other things. If he goes under the presumptive taxation scheme, he has to pay 8%. A circular was introduced, and that circular has been converted into a provision in the finance bill of 2017, saying that those small traders or businessmen having turnover of up to 2 crores of rupees who transact digitally, electronically, on electronic and digital transactions, on the gross turnover, the rate of presumptive tax would be only 6% and not 8%. Very good provision to take advantage of digital use in the trade. But the important point to be noted is the definition what is sought to be explained by digital. Digital would imply e-transactions, digital transactions, computer transactions, but more important, all banking transactions, which means transactions even by interbank transfers or by checks would be regarded as digital. I think this gives a very good scope for small traders, small businessmen whose turnover is up to 2 crores, that if they have even checks and banking transactions, the rate of tax would be only 6% of the total turnover. No difficulty in maintaining books of accounts, getting it audited. I think this presumptive taxation is a very good thing. Connected with that, for professionals also, a professional earning up to 50 lakhs of rupees also can take advantage of the presumptive taxation. 8% of the gross receipts, maximum up to 50 lakhs, can be taken into consideration. Very important thing now is that he need not pay advance tax in 4 installments. It is only in the last quarter in the month of March that only one time, one installment, one full payment of advance tax is to be made. Very good provision for professionals. I think this should be slowly extended up to 1 crore of rupees in the near future, depending upon the success of it. But the budget has given lot of powers to the assessing officers. Take one classic example here of the provision of 271 F, I think, J, 271J, where a power is given to the assessing officer to levy a penalty of rupees 10,000 on professionals like chartered accountants, merchant bankers, and valuers. If the report given or if there is some point which is not correct or fraudulent, then the assessing officer is given a power to levy a penalty of rupees 10,000 on the chartered accountant, merchant banker, or valuer. Let me point out that giving this kind of an arbitrary power or a discretionary power to say that the document is wrong of a chartered accountant to an assessing officer is not correct. For the chartered accountant, let us take into consideration, there is already a whole act of disciplinary action to be taken by the Institute of Chartered Accountants of India. They have a disciplinary committee. The chartered accountants are held responsible for giving a false certificate or any complaint made. Rather, the provision should have been that if you find that the chartered accountant has not given a proper certificate, then the assessing officer should complain to the Institute of Chartered Accountants and not take the action in his hand. I think this requires a little consideration so far as even the merchant bankers and also for registered valuers and other valuation reports which come under this particular category. Connected with this, I think another important provision concerns trust. Lot of changes have been made in charitable trust in provisions of section 11 to 13. The major ones are, there was a settled law that if one trust gives some funds to another trust, saying that these are only towards corpus donation. So these are a donation towards the corpus, going for the capital. It is quite natural. Why? Because small trusts may not have easy accessibility to capital. Big trusts contribute capital and say that this is straight to the corpus. It does not go through the P&L account. It is not income. It is in the nature of a capital contribution. Now the law says that any amount given towards corpus would be treated as income. It would be regarded as application of income and it would be fully taxable. It would be within the periphery of the 85% which is required to be expended by the trust and the balance 15% for accumulation purposes. So this transfer to corpus being treated as income would hit the charitable trust. Another provision which I think is very difficult, that if a trust, charitable organization, were to convert or change their objects, add an object, then in those circumstances, the registration has to be applied again. A trust has a registration for a number of years. They want to change the object. Take, for example, they want to bring in this digital point, have digital classes, have digital more benefits. It will have to apply afresh for registration. I think this is a very harsh provision, coupled with the fact that you can't make donations. Individual persons can't make donations in cash to any charitable organization for more than 2,000 rupees. Connected with the topic of this 2,000 brings me to the question of political funding and political. At the outset, I want to clarify that this government is the first government which has the guts to go in for a political funding and political donations. However, the point is that they say that no person can give a contribution to a political party in cash for more than 2,000 rupees. In my opinion, the limit of 2,000 is too low. The only beneficiaries of this provision would be, besides not the political parties, but would be the printers and the stationery people. They will have to bring out more receipt books. Political parties will now see that the donations are below 2,000 rupees. However, the government has also brought in the scheme of Swachh electoral bonds. The idea is conceptually good, but let me point out a few things. Political bonds, you can go and purchase them. They are like bearer bonds. They have no names. They have numbers. You purchase the bearer bonds. After taking the bearer bonds, within 30 days window, roughly it is 30 days, you give it to a political party will encash it and get the money. One important clarification is that a person who goes to buy the bonds will have to buy the bonds giving all the details, the bank number, the PAN number, and it must be from the tax paid amounts. So it would be all legal amounts. Issues for consideration. Number one, you give a bearer bond to a political party, the window is 30 days period. What happens if for some reason the political party does not encash the bonds? Issue number two, bonds have a number. The government can definitely link it because of modern technology as to which political party the bonds are given. Third, there can be some champions in the game who may buy the political bonds, route it for some other purposes in the 30-day window, and then give it to the political party for encashments. So they can square off their own deals and then get it off. So therefore, this has to be very carefully looked into. The modalities have to be considered in a very broad manner, looking into the question to plug the loopholes which a bearer bond would have. But on the whole, an attempt being made by a political, for a political party on political funding is an extremely laudable step. Another very provision which gives compliance more is on rent. Section 194 IB has been introduced. It means that if you are in receipt of rent from any premises and the rent exceeds 50,000 rupees per month, house rent being more than 50,000 per month, you are compulsorily required to deduct TDS at 5%. However, they have made it clear that the TDS is to be deducted only in the last month of the year and not every month. You take the totality of the entire year into consideration in the last month, and on that month you make a payment. Okay, now as the provision stands today, under 194I second provision, only those people who are subjected to tax audit deduct TDS. Now it is applicable for all individuals and HUFs who receive the amounts of rent of more than 50,000. In the last month, they have to deduct the TDS and deposit that TDS with the government, and the other person would get credit of it. Only thing, if there is not properly punched, then the credit would not be given. Or take another way, that they say that it is not required to even apply for a TAN, but I think it would be very difficult online to accept it without applying for a TAN. These points have to be sorted out. There is also a new provision which I call house property loss, which is restricted to 2 lakhs in a year. Let me explain to you the provision. As the provision stood today, you see, people bought a second house mostly by taking money from the bank. You approach a bank, you get a loan up to 80% or 85%. 15% is only your own contribution. And whatever the interest you pay, any deficiency from after deducting rent was allowed to be set off against all sources of income which you earn, including, say, salary, business, income from other sources also. Now, let me explain to you by an illustration. Supposing you have rented a property and you are getting 3 lakhs of rupees. As against that, your bank loan interest is 8 lakhs. So 8 lakhs you are paying interest, rent is 3. So there was a deficiency of 5 lakhs. This 5 lakhs, you were able to set it off against any other head. Now, what the finance minister has done is that you have a bank loan of 8 lakhs, interest which you have to pay, rent received is 3, the deficiency is 5. That deficiency, you cannot set it off against other heads. You can set it off only to the extent of 2 lakhs. So there will be a loss of 3 lakhs of rupees. Of course, the law says you will be allowed to carry forward the loss for a period of 8 years. But I think in such a situation, it is just an academic exercise. So the restrictions up to rupees 2 lakhs for house property loss and allowed to be carried forward would definitely be a big deterrent to invest in a second house. It would also upset the tax planning, which people have already done, because that would really create a problem of getting no set off of the bank interest, and this would result in a loss. And now, connected with the house property is the long-term capital gains provisions. There was always a controversy as to on which date the capital gains arose when you sell the property, specifically newly constructed houses and newly constructed flats. There was an old decision of the Bombay High Court. The decision stated that the starting of the payment of capital gains, long-term capital gains, arose in the year in which the agreement itself was entered. There were various divergent views. The Hyderabad Tribunal recently came out with a much dynamic view stating that it is only when you get the money or when the properties and the flats are sold. To put an end to all this controversy, the finance minister has done well. The finance minister has brought out an amendment which cuts all the controversy, brings clarity that it is the date of completion certificate which is received, which will be liable to long-term capital gains. So putting at rest all the controversies, when the completion certificate has been received by the builder, at that date, the long-term capital gains alone would arise. Connected with that, 2 important things which was brought: the holding period for immovable properties has been reduced from 3 years to 2 years, and very important, a beneficial provision, that the date of indexation for properties, which was originally 1/4/81, has now been shifted to 1/4/2001. So for all properties, I think this is a very beneficial provision. The indexation whole ball game changed. I think it was a whole rate, always taking into consideration 1481 value. Now, for all practical purposes of all transactions, the indexation is pushed forward to 1/4/2001 valuation date. This also pertains to joint venture agreements and joint development agreements. Even in a joint development agreement, it is the date of completion of certificate that would be the criteria in determination of long-term capital gains. The rates of long-term capital gains have remained the same. Please note, in this connection, so far as filing of returns are concerned, there is a provision today, Section 234 capital E. 234E postulates that if a person delays in furnishing a TCS return or a TDS return, in those circumstances, there will be a fee liable to it. Constitutional validity of 234E was tested. The courts held that it's constitutionally valid to levy a fee. Now they have introduced a new provision, 234F. In 234F, it is pointed out that if a person, this applies more to new assessees, delays in furnishing the return, for individuals it is 31st July for the time being. If it delays in furnishing the return up to December, then as per 234F, he will be liable to a fee which is 5,000 rupees. Up to the March of next year, it will be 10,000 rupees. For those assessees whose income is less than 5 lakhs of rupees, the fee is 1,000 rupees. Please note that in section 234F, the word fee is in conjunction with the word shall. So it is mandatory. Connected with that, you already have an existing provision, 271F. In 271F, if there is a delay in filing the return, the joint commissioner, not the assessing officer, the joint commissioner has got a power that he may levy a penalty, but he has got discretion not to levy the penalty of 10,000 rupees if he finds that there is good and sufficient reasons for not filing the return in time. So this brings me to the issue that if in filing the return there is a delay, then a person is visited with penalty under 271F. Now you have a fee to be paid depending on the time limit where you file, 5,000, 10,000 or 1,000. So there is a fee, which is compulsory because it is the word is shall, mandatory. And at the time of assessments, there is 234A interest which has to be paid. So a delay in filing the return invites interest, penalty, and now a fee, which is very heavy. Once you have filed the return, the next stage is processing of the return. You file the returns are processed. Processing of the return or means the acknowledgement or a chapa return. The acknowledgement comes. I'm just tracing the history. Section 143, 1D, introduced in 2012, said that processing is required to be done, but it is not mandatory before a scrutiny assessment is done. This position continued, so what happened was processing was delayed. Scrutiny took place. Therefore, the refund, if at all, was delayed, not given. Then, in 2015, CBDT came out with a circular, and the circular said, it is not necessary that compulsorily to have a processing of the return done. You can go away straight for scrutiny. The resultant was that you were deprived of the return. 2016, the matter was contested. The circular was challenged. The Delhi High Court said that the circular is not valid. It travels beyond the scope of the Act. Struck down the circular. 2016, the law was amended. Last year's Section 50 of the Finance Bill brought in a clause that it is required to compulsorily process the return before completion of assessment. So what was the position? The wording showed that before your scrutiny assessment would be completed, anytime, even a few days, a few weeks ago, the return would be processed, thereby depriving you of the refund. Now, in this budget, good provision has been brought. 241 capital A. 241 capital A now says that once you file the return must be processed. The refund, if any, has to be given. Thereafter, the scrutiny can start. This is going back, if you compare old section 241, 12 years ago, it is identical. There is only one exception now in 241A, that the refund will not be issued only to those persons if the assessing officer feels that the person is likely to run away out of the country or he is likely not to pay the taxes, then the refund can be withheld. Quite reasonable and quite well done on that issue. But my advice is now, immediately with the processing of the return, the refund should compulsorily follow as a logical sequence to the amendment in section 241A. Another section which the government has tried to correctly to plug the loophole were the penny stock provisions. You see, there were a lot of penny stocks which all of a sudden rose. People made a huge long-term capital gains. Now the government says that if there is an unlisted shares which were purchased in physical form, then converted into demat, later on sold, and when it was sold, the STT, the security transaction tax, was paid. Such would not be allowed. This is to plug the penny stock provisions, because in penny stocks, what happened was, they were unlisted companies. This provision comes into effect from 1/4/2004. The penny stocks unlisted, then they got it listed, the price was hacked up, sold, STT was paid, long-term capital gains was accounted for. We have plugged that loophole, more particularly for penny stocks, notified some exceptions that if the shares were purchased through IPO, rights issue, bonus, etc., would be allowed. But it's a good provision because the penny stocks were floating around in a wrong manner. Connected with this, you see, there is a provision, an amendment in section 41(1). See, what happens today is a provision, section 40A(3). You cannot deal in a transaction in cash for more than 30,000 rupees. In 40A(3), the limit is reduced to 10,000. But now I'm talking about those provisions in 41 which are not revenue in nature but capital in nature. Take, for example, you want to buy a computer. You pay in cash. you get a computer by paying cash and you have claimed depreciation of that. Now the law says, with an amendment in 41(1), that any payment made over 10,000 rupees in cash would not be permitted and no depreciation on the capital asset would be allowed. So this is on the payment and this is on the capital expenditure. Because for revenue expenditure, already section 48(3) was there. On per contra, this was on payment, so on the receipt side, a new provision, section 269 ST, has been brought. And this provision makes it very clear that no person can receive any amount in cash in a transaction, a single transaction in a single day, or on an occasion or an event, or multiple transactions in one day connected with one over 3 lakhs of rupees. So the receipts are restricted to 3 lakhs. Take for example, you go to buy a watch. The watch is 4 lakhs. You can't do it because any payment over 3 lakhs is per face, prima facie bad. This attracts penalty under 271 FA, and the penalty is equivalent to the amount which you have paid. Please note, the penalty doesn't start after the threshold of 3. Whatever amount is paid, you will be liable. In other words, cash components on sale and the amount received, say for jewelry, say for a watch, say for any items of luxury, cannot exceed more than 3 lakhs of rupees. The transaction per se is wrong. The penalty will be totally for the entire thing. That brings me to the question that if you were to purchase a car, again the 3 lakh criteria I told you would apply, but there is one additional point which they have brought. Any purchase of car for more than 10 lakhs of rupees, you will now have to pay additionally 1% tax. In other words, the dealer will collect additional 1% as TCS, tax collected at source. He will give you a certificate and that could be adjusted against your returns at the time of adjustments. It will be shown under 26 AS in the columns of the tax payable. But problem may arise that if you were to buy a second-hand car, the dealer is not very careful in uploading the amounts. This can create a lot of difficulty in getting the credit, the corresponding credit for the TECS for purchase of car. There are some rules on transfer pricing which has been brought, especially a new concept of the thin capitalization, where if a company has a very low capital base but a very high interest debt component is large, then 30% would be disallowed. These are in the thin capitalization rules. And for arm's length also, the primary and the secondary questions have been brought into effect on transfer pricing method. One other important provision I would like to touch is the amendment in section 132, particularly subsection 9A, concerning search and seizure operations. You see, whenever there was a search recently, people were challenging the sufficiency of the reasons to conduct a search, or the material, whether it was sufficient, whether it could be the basis of forming a justifiable opinion, whether there was justifiable cause for going for search and seizure operation. Now they have said that this argument of justification, in short, to the authorization which is challenged. You cannot challenge authorization up till any appellate stage. That means up to tribunal, it cannot be done. You will only have to, therefore, perforce go by way of a writ petition challenging the validity of the authorization, the validity of the search in the High Court. Another provision connected therewith. The assessing officer and the search party, if they find that the properties are not properly explained, source is not there, or is likely to be sold, they can have a provisional attachment even at the time of search. It's a very difficult provision to take into consideration. So provisional attachment right from the very beginning, not after assessment, which was the case. So these are the provisions which reasonably brings about a little difficulty. And look at this point, that if during the search and seizure operations, the searching party comes across some paper or document where the combined effect in 1 year or in more than 1 year, beyond a period of 6 years, show that income which has escaped is more than 50 lakhs of rupees, then he can tell you to file the returns for a period extending up to 10 years. See, at present, the block period, the block assessment of the search is confined to 6 years. Now, if something incriminating is found in a period beyond that, then if the aggregate value goes to 50 lakhs in a single year or in a group of those years, then he can order you that file the returns of block assessment up to the last 10 years instead of 6 years. This, I think, is also a very technically a difficult provision. On the whole, if you ask me to describe the budget is non-controversial. Why? Because it does not bring some fresh levies of taxes, does not bring in some new legislations. Under the present circumstances, I think so what is done is reasonable, but there was more scope to bring out the importance of digitalization. Connected with digitalization, I want to point out that with the advent of these checks and POS and all these things, there are bound to be a lot of dishonor checks. This dishonor of checks is creating a great problem, and the entire legal framework is overburdened. I've seen the recent statistics, it's astonishing. There are 2.35 crores of cases pending in subordinate courts, criminal cases, out of which almost 1/3 of it pertains to negotiable instruments, and the largest portion is attributed to traffic offenses. All these are just 2.35 crores of cases in subordinate court. Government wants an amendment in the Negotiable Instruments Act. They've done it, but the modalities have yet to be done. That if a person whose check has bounced, if he, before pleading his case, should deposit a certain amount in the court, I think this would go a long way. But some solution for speedy justice, speedy recovery of the money is absolutely required. The previous Chief Justice of India, Justice T.S. Thakur, while delivering a lecture on judicial governance in Bangalore, pointed out that a time has come where judicial officers and judges have now to concentrate more on cyber crimes, crimes connected with computer and digitalization, malware, and different aspects. I think the entire judiciary now and the future of the cases would depend mostly on cyber crimes and different crimes connected with digitalization, for which the country has to be prepared. In conclusion, I want to point out that this government is a very dynamic government. It thinks of the future. And therefore, I'm tempted to make an appeal to the government to take the example of Sweden. In Sweden, you have a Ministry of the Future. The Ministry of the Future functions essentially and primarily to predict the future and see how Sweden would be prepared for 2020, 2030, 2050, to take these steps and visualize what sequences, what circumstances take place. I think this government has so many ministries. I think absolute time has come for the government to devise a ministry for the future so that India is well prepared to take in the various vagaries of international circumstances, internal circumstances, changes in law, and changes which come about in various aspects. Then only the country can move forward in the right direction. Thank you.
Have some questions. Okay, so what we'll do is we'll read out the questions and sir will respond to it. Okay, so we'll start off the questions. The first one says, don't you feel that the FM could have given more relaxation to the corporate sector since they have been hit badly because of the demonetization?
Yes, I think I already touched it, and I'm really saying that the benefit should have been given to corporate sector, not necessarily from demonetization, but because you become more competitive to compete internationally. That is the reason. But the corporate rates, as I pointed out, should still, I'm advocating, should be pegged at 22 or 23% in lines with the average ASEAN countries' rates.
Okay, the next one says, could regressive taxation be more effective than aggressive taxation?
See, government wants to continue to collect taxes. There also I pointed out one thing. In the present scenario, to just widen the tax net will not solve the problem. You concentrate on the big fishes, catch those who are more particularly in Hawala transactions, real estate transactions, hoardings, agriculturalists. Agriculture also could be brought. Those super rich farmers who earn over 1 crore of rupees could have been brought. That I would think would be the real aggressive step taken.
The next one says, is BTT going to be a reality? And in what ways can taxation be reduced due to BTT?
What?
BTT, that's I believe banking transaction tax.
Banking transaction tax, I think so, was brought from April 2005 or 6 till 3 years, March 2009. Banking transaction tax, according to me, would be too harsh in the present scenario. I think it is not required for the time being. It can be relaxed. The first thing in this thing I would like to make a comment is, see, today India, according to me, is the largest democracy. When I say largest democracy, not only populace-wise, but even giving fundamental rights to the people. It's the largest democracy. After what has happened in America recently, India still, according to me, is the largest democracy. In a largest democracy, government should not put curbs on the withdrawals from a saving account or a current account. This is my point. I'm not looking into from the validity of the constitutional point. I'm looking at it only from a democratic point of view. And therefore, to that extent, Banking Transaction Act would not serve its purpose. It would be too harsh in the present circumstances.
Okay, the next one says the rate of 25% seems to be only for companies, right? Or is it applicable to firms, LLP as well?
Yeah, very good question. According to me, LLP definitely would be entitled to. I think they have used the word companies. The firms, according to me, are not covered, but it is worth taking a chance. Literal interpretation means companies and not firms, but LLP would be covered. Next.
Is there any tax rate change in precious metals?
I don't think so. There is any rates change in metals, except there is some increase in the rate in silver.
The next
See,
one.
they have kept excise duty, customs, service tax to the bare minimum. Why? Because the integrated GST is coming. Therefore, the finance minister was right in not tinkering with any of the indirect taxes.
A change on the capital gains for JDAs was announced
On
JDA.
JDA, Joint Development Agreement.
What are the implications of this?
See, the Joint Development Agreement means here you have a plot of land. You are the owner of the land. You are approached by a developer. The developer has got the expertise. He says, on your land, I will construct a building. He constructs a building. He promises you that he will give you some money up front, some money after the construction is gone up, and then he gives you 2 flats, etc. All this period, there is no capital gains. The capital gains would arise only when the developer gets a completion certificate. Let me look at it from a different angle. Who are the developer? Who are the developer or the builder? What happened was, he constructed the towers, sold almost 70% of the flats. 30% of the flats are unsold. These are his stock in trade. Now, the position was that in 1 year, the stock in trade, the assessing officer said that I'm charging you notional rent on the stock in trade of the flats, which are lying vacant. He charged a notional rent. The matter went up to the Delhi High Court. The Delhi High Court in Counsel Properties case upheld the view saying that you have to charge notional rent. Hence, in this budget, on the various flats which are unsold by the builder, 1 year moratorium period has been given. He can sell it still, the unsold flats, within 1 year. Beyond that period, the stock in trade, the flats which are unsold, the notional value of which is required to be computed. The computation is on the basis of Rule 114 UA given in the rules.
What is your take on the new tax relief measures?
There are not many tax relief. I think so. The major tax relief should have been, which is not in the budget, to increase the at least 3.5, 4 or 5 lakhs. The ATC benefit should have been given. There is nothing for the senior citizens or for the super senior citizens. At least for those over 80, the government could have got the courage to say there will be no scrutiny assessments for people over 80. Some kind of benefits in ATC I was expecting has not been given, or for mutual funds has not been given.
Okay. How do you see GST as a helping hand for the gems and jewelry industry? Because GST has been levied on rough diamonds. Wouldn't this put Indian manufacturing businesses at a disadvantage stage?
Yeah, the question is very important from 2 angles. Number 1 is on rough diamonds and the classification and the nature of the goods. Second, the rate of the tax. The rate of the tax should be very low and competitive. See, by adding GST, it should not be that the price of the goods shoots up unnecessarily and the tax component is very high. Plus, the classification factor has to be taken into. I think so GST is likely to come, but the set of provisions also should be properly done.
How do you interpret the budget's focus on the affordable housing?
Affordable housing, I think, is very good. But they have now increased the area by shifting it from the built-up area to carpet area, which means about 20% component has increased. Number two, for banking companies giving loans, etc., they would be also regarded as infrastructure. So infrastructure status given to housing companies also is beneficial. Loans would be, I think so, given at a cheaper rate. The rate of tax, according to me, is bound to fall. Now, though, let me caution you that we are heading for a lower bank rate now. But after 1 year, there is no option but to increase the bank rate. But affordable housing is good in small rural areas. The benefits will definitely percolate.
And we have the last question, which says the transaction fee on all the digital purchase would affect the demand. What's your take on that?
Digital fee on certain transactions, my opinion, should be waived. But the problem is like what pay a danger, and that would be very, very disastrous. Therefore, this is a catch-20 situation, but the government, according to me, for the time being, should remove the digital and the service charges on the debit card, credit cards, etc.
I think we have this many questions for the day, and we are good to end this session.
Okay.
Thank you once again, sir, for conducting a very informative webinar for us. Thank you all for being such an active audience for today's webinar. It was a pleasure presenting the webinar to you all. Thank you and have a great day ahead.